Hello and welcome to the Look Ahead video. So firstly, going to take a look at the main events this week and then the main themes that could be really driving the market. So rates, the main theme at the moment, has been the case since FOMC in Bernanke 2 weeks ago. So we saw rates drive higher, although we've seen the Fed pretty critical of the communication used by the FOMC, and rates have eased somewhat over the past week or so. So these Fed speakers generally a bit more dovish than Bernanke had been himself. And that could be a theme that's carried over to this week, and rates clearly followed also in Europe, especially considering this month seems pretty hefty redemption and coupon supply, so flow around 150 billion euros worth, and that compares to just shy of around 70 billion euros worth of supply from Eurozone nations. Also in Asia, rates keenly followed. Over in China, we've seen money market rates creeping worryingly higher over the past couple of weeks, although have eased somewhat last week, but that move higher in terms of rates was driving the short-term rates in terms of Europe and the US as well. But in terms of events this week, firstly, we have the ECB. Now, they're on Thursday, which is the same time as the US is closed for Independence Day holiday, so volumes expected to be much below average. But the ECB this month expected to make no change in terms of policy, expected to keep their rate on hold at 0.5%. But interestingly, over the weekend, we saw the French member ECB's curve suggest that the ECB could consider forward guidance. Now, this was a pretty main driver in terms of markets from the FOMC, as they indicated they see a rate hike bringing it forward, so around the end of 2014 before it was mid-2015. So pretty interesting topic, likely to be discussed in terms of the Q&A with the President Draghi. But also on the same day, Thursday, we've got the Bank of England. Mark Carney's first time as chair of the MPC. Again, not expect to make any change in terms of policy, but they could discuss forward guidance in the future, so central bankers looking to provide better communication to the markets. Now, apart from that, the main event will be on Friday. That's a non-farm payroll number from the US, so expecting the jobs report from the BLS. Now, the unemployment rate currently sits at 7.6%, but this will be keenly followed as the Federal Reserve's main bit of data, and they want to see a substantial improvement in the labour market before any sort of tapering to QE. So a much lower than expected number in terms of the employment rate could be a massive driver indicating tapering sooner than expected, and conversely, higher could indicate pushback in terms of that tapering expectation. But for the time being, that's enough from me. Hope you have a great trading week. It could be pretty exciting later on. But again, volume's expected to be light. But in the meantime, have a great day, and thanks for listening.